Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. Number one is I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. That's where stocks that are gapping higher or lower at the open, either as a result of an earnings announcement or another news-related event, will be drawn to specific price levels. And that's where the opportunity lies for traders. Traders that can identify the specific price levels where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. We're going to go over a nice juicy trade from this morning in PRGO in a minute. The second thing I do is give traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's the list from this morning, and as you can see, it arrived at 9 o'clock a.m., and that's Eastern Standard Time. We had only 4 potential gap trades on the board today. We had DVAX, DDS, SSYS, and Perigo, PRGO. Now, only one of the stocks hit their level, and that was PRGO, and we're going to go over it in detail in a minute. But what's important to make mention of is because we calculate very specific price targets for these stocks, we're only interested in taking the trades at the levels that we calculate because that represents the highest probability trade on the board. Unless a stock hits the specific level we're interested in, we take a pass. We don't want the trade. We only want the highest probability trades we can find. And by the way, that's exactly what sets apart successful traders from unsuccessful traders. Successful traders wait for price to come to them. They don't chase stocks. They don't chase price. They wait for the price that they're interested in because they know it's the high probability trade. Everything I'm discussing is taught in detail in my course at Lazy Gap Trader. Let's take a look at PRGO. I say gap higher. Resistance levels are 77.93 and 82.68. Stop and profit target is about 40 to 75 cents. These are minimum profit targets. And in the course, I show traders exactly how to use minimum profit targets in order to turn trades like this into a risk-free opportunity to get much more out of the trade if they're going to give us more out of the stock. The other part of this email contains a whole list of gap fill trades. When stocks do gap higher or lower at the open, it creates what's called an open gap. These open gaps at some point in the future will be filled. Some are filled same day, some are filled a week later, some are filled a year later, but they ultimately will be filled. I teach traders how to track them. I give them a tool to track them in the course, and I also give them all the specifics they need to know in order to trade them successfully, just like the morning gap trades. Let's go ahead and take a look at the detailed chart of PRGO. As you can see, the stock closed yesterday slightly above $66 a share. The stock was gapping significantly higher at the open, creating an opportunity for traders that can identify a specific price where these stocks will have a price reaction in the other direction. Let's take it down to a 1-minute chart so you can see exactly what happened minute by minute. You can see here that the opening price today was $75.49. The stock continued higher right toward the 77.93 level. We pierced through it by a little bit, making a high of 78.49, but staying within the stop loss limitation that was outlined in the email that went out before the opening bell even rung. And what happened just a couple of minutes later, the stock was already at a low of $75.56. That represents a pullback from the level on this short trade of $2.37 in just a matter of 2 to 3 minutes. And then you can see what happened. the stock rallied back to the same level, 77.93, and bantered about up and above and slightly below that level for quite a while. And what that does is it goes to show you the importance of these price levels. When you see a stock trading around a specific price level for a period of time, more than a few minutes, that's the chart's way of telling you that that price level is important. In the course at Lazy Gap Trader, traders learn exactly how to calculate these specific price levels. Even when you go back to the 10-minute chart, you can see even as the stock gets above the 77.93 level, it seems to fall back to that level and bounces up again. It goes to show you that the stock thinks that this price level is extremely important, and it is. Listen, if you want to learn everything there is to know about trading the morning gaps successfully, then come over to check out the course at Lazy Gap Trader. I give you everything I've got as it relates to this strategy. And it is a strategy that traders can use for the rest of their trading career each and every day. I'm David Frost. Thanks for tuning in, folks.